Well, hello. Hello, everyone. My name is Roberto Aguilar. I represent Dia Fintech and Aguilar Sank. And thank everyone for joining this webinar. We will wait 2-3 minutes to wait for everyone to join this webinar. So far, we have 20 people already in the webinar on Zoom, and we are also live on Facebook. So thank you very much for everyone that was collaborating to make this webinar happen. Especially thanks to Tim Martinez from Denver Economic Development and Opportunity, also to Renata Velasquez from ProColombia, and Antonio Martin del Campo from Zapopan Government. The title of this webinar is LATAM and US Fintech Companies during COVID, adoption of technology during the crisis. So, I mean, as you all know, COVID was something that affect everyone, that affect, every country. And here we have a very, I will say, a very specific sample of companies that through technology are passing this crisis. And well, for this, I want to introduce you to Scott Trench from Bigger Pockets. He's based in Denver, Colorado. Also want to introduce you Luis Ruben Chavez, who is the CEO from Yo Te Presto, which is a fintech from Mexico. He's based in Guadalajara. And also Andres Gutierrez, who is the CEO from Tepaga. So to start this webinar, I would like to give you the word to you guys. So basically we will have some questions that each of you could answer, please, and then we will have some questions, some Q&A from the people. So to start this webinar, I would like to introduce yourself and your company. What do you do? How do you use technology as a way of innovating in your industry? So if it's fine for you, let's start with you, Scott, then with Luis Ruben, and then Andres.
Sure. So my name is Scott Trench. I'm the CEO of BiggerPockets.com. We are a real estate investing company, both located in Denver, Colorado, beautiful Denver, Colorado out here, basically the midpoint of the country, packed in the Rocky Mountains out here. What our company does is our users are typically real estate investors looking to invest in single family homes, duplexes, triplexes, or quadplexes, and buy and operate these properties as rental income properties. We also have a smattering of fix and flippers and those types of folks. But the general goal of our users is to learn how to buy cash flowing residential real estate and use that to build private wealth, usually in conjunction with working a full-time job. So the way we use technology is we kind of enable the biggest challenge that these investors have when you're trying to get started in real estate investing is this fear of losing all your money by buying a bad property and having a roof or foundation or whatever problem or getting a bad tenant. And so what these users use Bigger Pockets for is they'll come to our forums, they'll read our books, they'll read our blogs, they'll listen to our podcasts, and they'll learn the ins and outs of real estate investing, and they'll be able to sink several hundred hours in, literally hundreds of hours, in learning about how to buy a rental property and make good decisions in that process and become comfortable with the idea of making their first or next investment. So we use technology to create a community and facilitate connections. We use technology to help these users produce user-generated content like forum posts, blog posts. We use technology to distribute our podcasts. That's one of our biggest parts of our brand is a podcast listenership. And we use technology to deliver software products that enable these folks to analyze deals, get data on the real estate industry, and then advertise and promote their businesses and make connections.
Wait, sorry, Scott. So you work as we could say that Bigger Pockets it's kind of a crowdfunding for real estate.
I wouldn't call us crowdfunding for real estate. I'd call us more of a community of real estate investors, a social network of real estate investors, and then a content library. So, you know, what you're doing is you're learning how to invest and making connections on Bigger Pockets. You're not actually committing your capital to crowdfunded real estate investments through Bigger Pockets platform.
Okay, great, thanks.
Okay, so hi everyone. My name is Luis Ruben Chavez. I'm the CEO and founder of yotepresto.com. We are a marketplace lending platform based in Guadalajara. Basically, what we do is we connect borrowers with investors, hoping to deliver more fair and more competitive rates, both for borrowers and investors. Typically in Mexico, the average interest rates on a personal loan or a credit card is around 45 to 50% by big commercial banks, and this market is so big and is so concentrated in just a few players, meaning 4 or 5 banks that control basically 90% of the consumer portfolio in Mexico. So, and on the other side, we have millions of people investing in really simple and not interesting products for their savings. So basically, what we do is we make that borrowers get a much better, lower rate than they would pay with banks, and investors get a much better deal on investing their money. We're currently in the process of receiving a license due to this new fintech law that was introduced a couple of years ago here in Mexico, along with another around 90 fintech companies. And we've been in the market for around 5 years now. And the way we use technology is basically we process around 60 to 70,000 loan applications every month. We do this with just a couple of credit analysts because technology takes care of it. We have a very automated origination and model risk platform that pretty much takes care of all the underwriting. This model prices the loans that are authorized and publishes on the platform so that thousands of retail investors can crowdfund on them and get these returns. Around 70% of our clients use our loans for debt consolidation purposes, refinancing their credit card debt or personal loans debt with banks, and saving around 60 to 70% on the interest that we're paying with their banks. That's basically what we do.
Great. Hi guys, my name is Andres Gutierrez. I'm founder and CEO of Tepaga. I don't know if you're all aware, but over 50% of the population of Latin America do not have bank accounts. This means that over 300 million people do not have access to financial services, but they do have a cell phone. So I guess what we realize is that we can build a bank from scratch, starting with a mobile wallet or starting with an app, and that we could basically in one single app replicate all the value propositions of a bank right there from your pocket. As I mentioned, in Latin America, people do not have access to open up bank accounts digitally. So in Colombia, for example, only 5 out of 25 financial institutions or banks have a digital process. You can open a bank account. If somebody wanted to go and pay a bill, a utility bill, they'd have to leave their house, walk to a bank kiosk and actually pay it with cash. And this was the same necessity if you wanted to top up your cell phone, if you wanted to pay a credit, if you wanted to ask for a credit. I think Luis Luen can actually talk about how not digital that process was. So we basically realized that we could digitize that entire process. Our vision is to become a financial super app in the region. So one-stop shop where you can have any type of financial service. We started a couple of years ago in Colombia. And right now, how we're using technology, it's basically we're allowing people to stay at home, not expose themselves to contagion via COVID by having to take a bus to go to a bank account, to a bank to open up account. So you can do everything right there from your home. So that's basically our main focus right now. helping people be able to do financial services while they're staying safe at homes.
Great, Andres. So yeah, I mean, I think in Colombia and Mexico, I would say that there's a lot of similarities in the problems that we have on the financial sector, and especially on digital, like how digital banks have a huge opportunity in the sector. I don't know, what are your thoughts on that?
Ruben, do you start, or do you want me to?
I mean, financial services, basically, I'm not including the US because US is just on another level. But what you see typically in LATAM is this huge concentration of the market in small hand, or in very few hands, meaning like big banks. Really crappy financial infrastructure systems wise. Very poor distribution channels to acquire customers via digitally, and the worst customer experience you can have for almost any financial product you can ask for. Also, on the investing part, I have this data point that around 60% of adults in the US invest in the stock market. That 60% compares to 0.3% in Mexico. So you have this massive opportunity to deliver good financial products so that people can start investing through new products and through digital channels. So what we've seen is that the two biggest problems, taking aside the financial inclusion that Andres was talking about, once you are like financially included, the products that you can get on the credit on the investing part are really bad products. So what we're seeing is that you can tap into these two big problems that are very likewise in basically every LATAM country you can talk about, right? So if you can scale with technology the process of originating credit, and on the other side tap into this opportunity to crowdfund so that people can get better rates, and on the funding part with this disruptive business model, you can deliver the best rates available in basically, for example, here in Mexico, we deliver the lower interest rates in Mexico than any bank on unsecured loans, everything by internet, and with no need to, as Andres told, to go to a bank branch or whatever it is. Do it on 5 minutes through your smartphone in the commodity of your home, and allowing all this massive market of retail investors to financially include them on the investing part. I believe that my view is that financial inclusion sometimes is just like narrow to giving a people a bank account, and I don't see that as financial inclusion just as that, but rather delivering good products and a solid value proposition so that a company can deliver a wider range of products, so that people doesn't have to be skipping between too many companies or products or services or banks to get a financial suite that can help with their everyday life, right? So that's pretty much the way I see it.
I think that's a perfect summary. To be honest, I don't know if I can compliment any much, except of what we view is like what Ruben was saying about infrastructure. It's really crazy how slow or how basic the infrastructure is. So basically, right now, if I send money from one bank account to my wife's bank account, it can take up to 2 days for that money to actually get there. And it's because they're still using a legacy system built, I don't know, 30 years ago. And those are the rails through which banking systems are actually working. And this delays e-commerce. this does not make it more competitive. And to Luis Ruben's point as well, we applied for the first sandbox in Colombia. So the first regulatory financial sandbox in Colombia was to allow people to open up mutual funds from their cell phone. So prior to this, the only way to open up a mutual fund, which is a place where you can deposit money that hopefully gives me a better interest than the normal basic savings account, you had to actually go to a bank branch, fill out paperwork, and to open up a mutual fund. And if you're working at coffee farms in the Andes Mountains in Colombia, how are you supposed to actually go and find a bank if the closest bank is 3 days from where you're working? So we realized that the infrastructure wasn't really accessing the people who most needed financial services. And because of not having financial services, they're exposed, I think the term is, to the loan sharks that live in these neighborhoods where you can say, well, I don't have a bank. Can you lend me $200? But with ridiculous interest. So I think this lack of, like Ruben was saying, the distribution and the infrastructure has made a huge opportunity for somebody who wants to build a bank right now. He doesn't have to spend millions of dollars opening up bank branches or thousands of dollars for ATMs. You just have to create a very clever way to approach somebody on a cell phone. And I think that's what we're trying to do, at least.
Great, thanks. Yeah, sorry, Scott, to leave you a question, but I mean, in US, like for us, well, I mean, at least on fintech and financial services, I think US is like top, US and maybe UK. So maybe you don't have these problems that we do in Latin America, but well. So next question, if you can like start answering this question, Scott, and then Luis Ruben, and then Andres. So what happened to your company during pandemia, during COVID-19? What were the main issues, the main opportunities in your industry? And how is the situation now in your country, in your state, in your company? How is the situation at the moment?
Yeah, well, first, I'll just chime in and say that was really enlightening to hear from both of you guys about the infrastructure and the challenges in the financial systems in your countries. I had no idea, and I'm learning that right now for the first time. Found it fascinating, and I think you guys are doing some good work to solve those problems. Just as a very quick commentary, I think we have great financial infrastructure here in this country, but there's a couple of things that are surprising here and there. It takes us 3 days to move money between bank accounts as well. If they're not in the same bank, for example, those types of things. So there's some opportunities, but all in all, we have really good access to credit and institutions if your credit is good as an individual or institution. As far as what happened to the U.S. during the pandemic, I think many people would say that the U.S. has handled the pandemic maybe particularly poorly. We actually have a disproportionate number of the world's cases and deaths relative to other countries around there, due to maybe a number of factors. There's a lot of interstate travel. So Americans are moving from state to state, maybe a particularly high frequency. That's a guess. I'm not sure how things work in other countries as far as intra country travel. But our country, is all shut down for a period of time. We, a large number of hourly and hourly wage earners and services professionals were laid off and lost their jobs. But one of the interesting things that was a result of that is that we offered a very, I think, powerful and effective unemployment program. The unemployment in this country lasts for about 9 months after folks are laid off, and we subsidize that with a $600 additional incremental unemployment check for those laid off due to COVID. So I think that actually postponed some of the bigger effects you might see in the real estate industry, for example. Everyone was predicting a large number of people, for example, not to be able to pay rent. And, as far as our landlords go, their tenants were typically able to pay those rents. And we didn't really see a big change in, for example, rent payments and property prices in many markets around the country. So the question, right now at the moment, I think, is how long is that going to last? And, our Congress has to pass another stimulus package. And so if they don't do that and the unemployment is running out and folks aren't getting those paychecks, I think that's where we could begin to see some system checks. So it's kind of this big question mark about what kind of government action is going to take place. If there's no action, I think you're going to start seeing lots of missed rents, and at least in the real estate space, it's going to have a large number of trickle through effects down to lenders and landlords and all those types of things. But I also believe that our government is likely to pass some kind of additional stimulus that passes through to renters, for example, and allows us to continue churning out that big portion of our economy.
I think you have the audio off, Ruben.
Sorry about that. So different to what happened in the U.S., in which the government stepped in with a huge, I think what's something like 3 trillion or something like that on the.
That's right.
With the PPP program and all those kinds of things. Here in Mexico, unfortunately, we don't have those stimulus packages. So basically, what you have is like a really straightforward market contraction, and you can see the effects of the COVID pandemic like 50 minutes from it started, right? So people were like right away were furloughed from the small companies that couldn't afford to pay payroll without giving away, without any sales. All the landlords, mostly all the landlords on the commercial real estate had to step in and give discounts to their clients so that rents wouldn't collapse massively in the whole market. Around 60 to 70% of the employment in Mexico is through informal companies that basically have no way to handle an economic shock of these proportions. So a lot of people were cut off from their basic income right away since the pandemic started. So what we've seen is that on the banking part, roughly 8 million people were asked for the pandemic protection on their payments on their loans with banks. That's around 25 to 30% of the whole market on the consumer part. And at Presto, we delivered these kind of solutions to our clients, and roughly 10% of our customers asked for a furlough program. And out of those 10, right now, 8 of those 10 are already paying back again, and 2 of them are still struggling. So we have like a 2% of our portfolio with some problems that are keep struggling to come along with their payments and the regular cash flows. And the big question is how much is this going to take, right? So what we've seen is a bizarre context in which on the US you have this election going on. So there are a lot of interesting happening there on the vaccine part and the stimulus checks and all those kinds of things because of the right-of-way election they have down there. But what we've seen here is that the government will absolutely not step in giving stimulus in mostly any way. The only thing we have been seeing here in Mexico is the central bank giving some liquidity to the financial markets and allowing some banks and the banking regulators to deliver renegotiations on their loans to the clients, so then banks don't have to take the losses on those loan portfolio write-offs. But rather than that, you don't see much more than that. And on the other side, you know that the vaccine will take roughly 1 more year to be like fully distributed in all the population here. So the big question is how much can the market struggle in this like on and off economy. We are seeing, as in every country in the world, a new spike in coronavirus cases because the lockdown somehow ended, but absolutely no one was prepared for this. But you couldn't keep the economy closer for much more, or the country will just collapse. So it's an interesting part because you see a struggling like credit sector, but on the other hand, we have the new record on the investing part in last quarters. So you see a massive number of people that are now like saving and more than they used to do pre-pandemic, and delivering new sources of income via investing. So it's really interesting to see it. And the last interesting thing that we are seeing is that you have like historic low rates on the market, but on the other hand, you see a very risky credit environment. So it's so much interesting to try to level up these two different situations, and all this, it's just never heard of. It was just so unexpected, so fast and so massive that I think we're just trying to get a hold on how to take the next steps from here.
It's amazing how similar certain countries are, right? So I guess I'm not going to repeat much of what Luis Ruen said, respecting obviously time so that we can get everybody's agenda. But I think Colombia had something very similar to Mexico. I think 48% of our workforce is informal. So it means 48% of our workforce does not have the typical job where I have pensions, where I have security, where I have this medical coverage. No, because 48% are either taxi drivers, bus drivers, delivery, door-to-door sales, we're coffee farmers, like I mentioned. So I think Colombia struggled a lot to how do we prepare for these people? At the same time, we didn't have financial services to give them actual, the stimulus checks. But I think all of that actually helped the country finally start acting as a startup, which is we have to make decisions quickly. We don't know if this is gonna, if we should make a decision to quarantine for a month, for 2 months or 3 months. We're just gonna start experimenting, and with data, we're gonna start modifying, which is pretty much what we do in our daily jobs. So I think what at least the Colombian government did really good is, let's buy us time so that we're not collapsing our clinics and our hospitals, which is what we sort of saw, I guess, everybody from the videos and the footage of Italy, right? Where people are not being able to attend. So I think the country did a good job of sort of trying to close or minimize the events where you can get a contagion, right? So let's close international routes. Let's prohibit any gathering of more than 10, 15 people. Let's do some serious quarantines. And I think, obviously, we knew the effect was going to end up being high unemployment, a lot of companies closing. I think in the data that came out today, every day, 3 companies are closing in Colombia or asking sort of the foreclosure. But I guess what it allowed was a lot of businesses to understand that they needed to be digital. So we're talking about big companies like Sab Miller, which had never, I think, sold a beer digitally, started selling beers digitally. Nestle did the same thing. We started to get a lot of the traditional brick and mortar retailers who didn't have an e-commerce site starting to build an e-commerce site. So we started seeing this sort of forced digitalization if you want to survive. And this boosted, obviously, e-commerce sales 300%, mobile wallets 100%. And it's hard to say that this is beneficial, because I think this is, the worst scenario that's ever happened to our generation. But I think it has at least woken up an understanding that we have to be digital, and every business has to have a digital strategy. If not, you're going to have really hard time surviving. And I think COVID really drawed a line right there, and which companies are prepared to be digital, which not. And I think a lot of people are catching up. But I think in our case, we are very lucky that we're one of the we're one of the businesses that benefit from the social distancing or from the quarantine. So while the Colombian government or the economy contracted 15.7% last quarter, we grew 75%. And it's once again because people need to find digital ways to pay bills, to transfer money. And I think when there's very few mobile wallets doing what we're doing, I think we benefited from that. So I guess that's sort of the country situation opportunities in a nutshell of Colombia.
Great, thanks. Yeah, so, well, I think we could all agree that during the pandemic, like technology has been a way of like solving solving problems, and like as you were saying, Andres, that people that they, if they want to get cash now because the pandemic, like you shouldn't go to a bank or stuff like that. No, so then we see like how technology could resolve some issues, especially in the financial sector, but also in other industries. Like saying that, Scott, and this question is for everyone. How could you describe the adoption of technology on your country? I mean, like we know US it's has one of the like the biggest like tech companies are from the US, blah blah. But then I mean I'm assuming, or I mean I know that there are also like some still some problems in the adoption of technologies. So if you guys could say like a status of how adoption of technology is currently in your country, and also if you think that during COVID this has increased.
Yeah, I could start there. I would say that you know, technology adoption has been really widespread across the United States for a long time. The laggards in adopting some of the video conferencing and social media aspects of technology, I think, are folks who generally are a little older. So I think what you've seen with the pandemic in terms of the adoption of technology is a lot more folks embracing technology that maybe they hadn't fully embraced previously, like Zoom calls, like what we're on right now. You know, video conferencing, social media accounts. My parents are both using Instagram and TikTok now and really enjoying themselves. So you're seeing some of that. You're also seeing technology used in slightly different ways. Tons of people are working remote from home, at least working professionals are that, you know, in white collar jobs. We're seeing schools moving to virtual and doing virtual school classrooms and those types of things. So I think it's going to challenge some of the assumptions we've had about whether you need to be in person. But I'm interested to hear, you know, really what you guys have to say, because I think, you know, there might be some more interesting commentary on the adoption of technology in your countries than maybe here in the United States.
In a case, if digital penetration and adoption was rising double digits every year, basically what COVID did was to put steroids on that, and what we're seeing like increases in demand of in our case of 20-30% a month, right? So what I believe that Mexico has like the fifth biggest Facebook user base in the world or something like that, and one of the 2 or 3 top per capita in the world. So, I mean, digital wise and digital penetration in Mexico is a thing. Basically, you have like 99% of the country is like very well covered on internet reception. One of the richest men in the world is a Mexican that has all this infrastructure built through the entire country through his company. So infrastructure-wise, I think the whole country is like ready, and we've seen it. We've seen that huge spike in digital adoption in basically any industry you can name, as Andres was saying. And what you see to start like collapsing is all the infrastructure for a wide array of services that depend on scaling through the internet, right? So basically, you are seeing a lot of holes to be covered, and a lot of new opportunities to deliver new products on the infrastructure part of the internet, whatever, if it's on the financial services, on the e-commerce, logistics, a lot of industries that have been impacted positively with this new spike in usage of internet. Even the streaming services are right now booming. So I believe that this was just like a disease that was already diagnosed, but everything just like accelerated three or four times in a little short span of time. So all the companies that were well fitted to address this increase in on demand are the ones that you are seeing raising funding rounds and growing the user base 2-digit every month. And I believe this is a good price for those entrepreneurs that have been working on the internet space for a couple of years when everybody was saying it's too early, and now you're seeing the payoff of that. And I believe we are just seeing the tip of the iceberg, as everybody is saying that the new normality will be just the internet, the demand for services and products will just keep growing, and because you access to a whole new market that was never willing to do things digitally, and now they were forced to do it, right? So you untap all these niches or discover all these new products that you could deliver through digital channels, and it's just amazing to see the level of innovation and new companies that you are seeing being born every day. Really exciting times to see it down here in Mexico.
I think Colombia really made a lot of progress, not just with COVID, but over the last 5 years in terms, I would say, of affordability and access to internet, right? And I think that's defining sort of how we're doing in that sense. The Colombian government reduced tariffs with the importation of obviously equipment. So like in typical countries, when you send something abroad, there's a tariff to bring that, nationalize it, right? For cell phones and for computers, I think they eliminated tariffs all entirely. And I think the pricing of the gigas has reduced, I think it was 30% over the last 3 to 5 years. So I guess what I'm saying here is that we've really made a chance or made it possible for anybody, even if it's a low income consumer, to basically have a cell phone. What's interesting in Colombia, and I think it's similar to Mexico, is that, and I think you'll find this interesting, Scott, we leapfrogged the whole computer at home. So the first access of internet for the majority of Colombians was through their cell phone. So they never had the computer and doing ICQ or Messenger through a computer. No, they never had money for the computer, but then the computer started saying the cell phone started competing with the computer and saying, look, this replaces that computer. So a lot of people sort of jumped the whole computer phase and now they have cell phones. But once again, I think right now we have more cell phones than population in Colombia, which is obviously a great stat. I think smartphone penetration or internet penetration has reached, I think, a 65% of the population. So I think there's over 30 million of the 50 million people in Colombia already have access to internet. And I think to what Luis Ruben was saying, now they're just being forced to do it. So before, grandmothers used to go and sort of buy groceries, but now they're being forced to either download an app and do it themselves or ask somebody to do it, but via internet. So I think we've never been, I think once again, the digital companies have never had such a good push that are forcing consumers to start having to adopt the digital. And I think Colombia was once again a bit lucky that we did sort of do a good work of developing the 2G, 3G, 4G, now 5G in terms of telecommunications, of reducing the cost of the equipment. So right now, I would say never in compared to sort of the developed markets, but in terms of emerging markets, I think Colombia did a good job of sort of preparing at least or laying the groundwork for benefiting from the population.
Great, thanks.
As a fun fact, if you need to buy an iPad here, at least in Guadalajara, you can find it. There are no iPads available in any retailer here in Guadalajara. You have to order it online. It's 1 month of delay to get an iPad for your kids to attend their Zoom classes, which Zoom is now like the new ICQ. So it's interesting to see the leapfrogging we're seeing in basically any angle you can speak of.
Yeah, well, so I think in summary, we could say that like during pandemia, like technology like was a way to continue working, to continue studying, even though there were people that were not used to 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 like to these platforms, or like I don't know, like social media or stuff. Like it was the only way to either like work, study, or even like get communication with your family. So I mean, that was one of the, I will say, one of the good things about pandemia, like talking about like in the sense of technology adoption. So like the next question for you, I mean, and for everyone, uh, what do you think are like the main challenges and opportunities for your company and for your industry in the medium long term?
Yeah. By the way, again, just found that discussion really fascinating, Luis, Ruben, and Andres. Thank you for the insight there. Had no idea about that over the last 5 years, and that cell phone affordability leap is just really a fascinating thing. You know, everyone I know here in the States, you know, has at least usually a phone and a computer, often that tablet as well, and the whole, you know, smart TV, the whole setup there with a lot of folks. To answer your question about main challenges and opportunities, I would say in the real estate industry, the main challenge right now is that uncertainty around what the government is going to do next. Because if the government does nothing, we're going to see deflation, because renters are not going to be able to make rent payments. There's going to be evictions, prices will come down. You know, for rents, property prices, default rates may begin increasing, those types of things in the rental space. If the government does act, you know, and does a very, very large stimulus, we might see inflation and rents increasing and property prices increasing. So it's interesting. It's a little bit of the path forward here in the short run, I think, is going to be a little uncertain for some investors. And so that's a challenge when you're, you know, an ordinary person looking to buy, you know, move out of your home and keep it as a rental or sell it. Which is a lot of our users, or buy your very first rental property. Just kind of that uncertainty with a big chunk of your net worth, I think is a difficulty for us that we're trying to help address through great debate and discussion with economists and data and various opinions, one way or the other, and those types of things. The election will obviously be very, very important. So the opportunity that creates is a chance to discuss that in the form of content. Long term, I would say the challenges are I think it's more opportunity than challenge for us long term, because I think that this pandemic and events like it kind of really spur the idea of, hey, if I can work remote at this job, I can really do that job from anywhere in the world. And you know, how do I create passive income or separate my time from my job? That's a big goal for a lot of our users, and I think that this pandemic and the uncertainty that it produced and the job loss will encourage more and more people to look for a second source of income outside of their job, perhaps through real estate investing. And then I also do happen to believe that the government is more likely than not to act in a big way with a large stimulus package. And a large stimulus package, I think, creates inflation, you know, in downstream, which is largely to the benefit of real estate investors as prices rise over time.
Well, on our side, I believe that the biggest challenge is to take the biggest advantage of this digital push we are seeing right now. Try to adapt our company to tackle the demand we are seeing right now in both in borrowing and in investing, and to try to scale the company to a different level, but not just being like with as I talked about, with just a limited number of services, of financial services, but rather than that, building a suite of services. Now that you have the clients, and now that you have this impressive push via internet, I think it's just like the perfect storm to try to build different things and trial kinds of experiments. So what we're going to see is this on the fintech part, you are about to see an explosion of deals of big banks trying to get a sense of all these small fintech companies targeting specific products and niches and markets, and see how can they collaborate. We already seen this with, for example, Banorte and Rappi that announced that, like, this huge deal. And I think it makes a really clear statement that fintech, the fintech adoption is here to stay, and it will just keep growing every day. I believe that like the Pandora box just got absolutely opened in a very disproportionate way, and everybody's trying to build the Mexican Chime or the Mexican Amazon or the Mexican whatever, because you see that all those customers and markets that were dormant right now are pushing to get this product digitally. So you're going to see a lot of innovation, a lot of new companies, and all these, as Andres told, all these companies that were like very reluctant to make any efforts to go digital. It's do it now or die, right? Or lose your position in the market. And not all of them have the DNA or the capacity to adapt quickly. So we're gonna see, I believe, a lot of M&A activity here in Mexico really soon. As soon as these big companies and corporates find out that they are missing a big part of the action for not being ready to deliver these kinds of digital experiences. And on the financial or economic part, it's a big question. How is this going to evolve? I believe we have already reached the bottom with a couple of months ago, when the lockdown was in the biggest, in its biggest force or results, and we're bouncing back little by little. We expect to deliver new solutions for people that still have a tough time bouncing back from this situation. But on the other side, we see a lot of upside on all the demand that is growing right there through digital channels everywhere.
I just quickly compliment that. I think for a lot of startups, not just us, I think the uncertainty of access to capital is going to be really hard. I think most of our companies, or typically startups, they're not cash flow positive yet. And I think that requires that for you to scale, you're going to have to raise venture capital, right? And I think a lot of venture capital is still pretty uncertain of which are going to be the winners, who's going to be the losers. How long is this going to last? So I think it's going to be harder to raise capital. I think that's to be honest, my main concern. I think if you're looking at opportunities of what you said, I think there's going to be a bunch for the digital companies, right? I think all the companies are going to have an e-commerce, or if the retailers, they're going to have an e-commerce site. To do that, you're going to have a payment platform. You're going to require one of the fintech companies. I think for what Scott was saying, I think every company that's having to sell apartments or homes, or the entire process has to be digital, right? I think I was actually talking about this as a friend of mine was buying an apartment. The amount of paperwork, but like actual paperwork that you still have to do, of send me a paper, I have to sign it, I have to go to a notary to authenticate it, then this has to be digital, right? And I think it hasn't been digital because nobody has forced the companies or the regulation to accept digital signed paperwork. But now this has to happen. So I do see a lot of opportunity for the companies in every industry who are working on how do we digitize this, that, and other services. I think for us, it's going to be how do we prioritize? How do of all the opportunities that I just mentioned, which do we focus on? Because I think we have to do, we cannot do 10 things well. You have to do just one well, because if not, the competition or the banks are going to really beat us. So I think we have to prioritize, we have to be smart on how we're going to access capital. But I think we really have to take advantage of the digitalization of a lot of economies.
Great, thanks, Andres. So if it's okay for you, we could move to the Q&A part. So if anyone has some questions, please send it through Facebook or through Zoom. We already have some questions. Let me read it. So yeah, we got one question for you, Scott. We got an email that was saying that if it's easily scalable, bigger pockets to other countries, I mean, outside the US, or you're based just in the US?
Yeah, we have, when we look at the business, we're a young company. We're still kind of figuring some things out. We're learning how to operate at scale and grow quickly. We just kind of see the United States real estate market as so big right now that we're kind of staying heavily focused on that and really kind of continuing to expand our business model here. I do think that there's no reason we can't kind of offer the same solution set to folks looking to invest in real estate in other countries. I don't know anything about investing in Mexico, for example, but there's a lot of people who do, who I think would love a place to come and talk about it and share their ideas, debate how they could do that, and invite and encourage other people in their local markets to do that. So I think absolutely at some point we will begin expanding into other markets, and it's just a question of us kind of really refining our operating system as a business and being able to find some great talent and begin the process of expanding into those markets.
Great, thanks, Scott. Luis Ruben, we have like Jose Manuel Manzano. He was asking, in Mexico, it's legal for a new crowdfunding company to offer equity financing, debt financing, and co-ownership financing. That's a question. And what will be the main challenges to reach it?
Okay, so it's absolutely legal, but since the fintech law was introduced in 2018, now you need an actual license and permit by the Mexican authorities. Prior to the law, since this was not regulated, you could open your crowdfunding platform just like that, right? But since now there is a law, you have to ask for permission, submit all the paperwork, and ask for a specific license for the specific crowdfunding model you like. If it's lending, if it's equity, whatever it is, it's legal, but it is illegal to do it without the license and the specific consent of the Mexican authorities. And the obstacles, well, as any startup, you have like 2 million obstacles, but I believe that building a marketplace in which you have both kinds of users, in our case, borrowers and investors, it's an interesting dynamic to try to balance them and to be fair with both parts, and delivering liquidity in the platform so that there is enough resources and enough product to be deployed. So this is like the biggest struggle with any marketplace. And but yeah, it's completely legal, but you just now have to ask for your license to the Mexican authorities. Yeah. Maybe you can help them with that, Roberto.
Yeah, sure. Thanks. Yeah, so as Luis Ruben was saying, like there's a new fintech law in Mexico that was issued 2 years ago and has been implemented like recently. There's still no, like there's around 100 companies going through the fintech authorization right now. So it's a good opportunity. It's a nice moment to create and open a fintech in Mexico. And I was thinking that like in Mexico and maybe like Colombia, there's a lot of like, for example, like the rates, the interest rates that we have in Mexico or we have in Colombia or we have in like other Latin American countries are illegal in the US. Like, I mean, like in Mexico, we could have like even like 50, 60% interest rate on on a credit card, which it's completely like crazy to think something like that will occur in the US, no? So yeah, and so we have another question from Eduardo Duran. I think maybe you, Andres, could answer it. It's what's the main challenge that we will have in Latin America in order to implement fintech solutions?
I think to the point that you guys were speaking a minute ago, I think it's really regulation, right? I think our countries, both Mexico's doing a great job. I think Colombia as well, sort of modernizing or creating sandbox or creating the SOFIPO, the SOFOMs of what's been happening over there, of other regulations. Because before in Colombia, to open up a bank or to provide banking services like Tepaga is doing, 3 years ago, we had to have $40 million just in assets, just holding there. Right now, with just basically a special permission, you can open up a bank account. But I think if you want to go further, if you want to innovate, cryptos is something still illegal in Colombia. And right now they just passed a week ago this special sandbox so companies can experiment with cryptos. I think it's going to be regulation because a lot of the wish list of what tech companies want to do, it's still very illegal. And when you're talking about financial services, when you do something illegal, it's not just a fine. In Latin America, they take the representative of the company to jail if you do something illegal in financial services. So here it's really sort of understanding very well the regulation and hoping that the regulators are also advancing as solutions are advancing or deeming them.
Great, thanks, Andres. Scott, we have a question for you. It is possible for non-Americans to invest in real estate through bigger pockets. Sorry, and also if you could share the name of your podcast.
Sure. So the podcast is called the Bigger Pockets Real Estate Podcast. If you're interested, we actually have 4 podcasts though. We have the Bigger Pockets Real Estate Podcast. We've got the Bigger Pockets Rookie Podcast for folks looking to just get started. And then we have a money podcast about personal finance and a business podcast for folks looking to build, small businesses. As far as investing in real estate in the United States, yes, it is possible. There are certain capital requirements, which I'm unfortunate. I should know this off the top of my head, but I don't. Around how much capital you need to invest and certain ways to do that. And often in some states, when you sell property and you're not a resident of that state, you can incur additional taxes on the sale of that property. So our platform, ironically, Bigger Pockets, has lots of discussions about this and experts in the community who know how to help people from out of country invest in those states. But if you would like to ask me that question again following the call, feel free to email me and I can help. I can maybe pose that to some of the experts within our community about the specifics of investing in real estate from out of country.
Great, thanks. Yeah, because I just got the idea that in the US, as a foreigner, like if you buy, I think there's like specific states, and I don't know how exactly how it works, but you could get a visa if you buy like a real estate. So yeah, maybe that could be also like a nice like opportunity because like for us, like Latin American people to buy like a house or something in the US, I will say that not everyone will have that like financial situation, but there's a lot of people that that has that opportunity, and sometimes just buying a house is the easiest way to just get the visa, no?
That's fascinating. I have not considered this fully, and so I'm spitballing here. But yeah, I think a lot of people are probably may use that rule to buy a house in order to get a visa. Why not, if it's allowed, instead buy cash flowing, high return investment real estate to cover that investment? So you're making money while you're also getting access to that. That's fascinating. I need to explore that more and think through that.
Yeah, and what's like the average ticket, let's say, for you on Bigger Pockets?
The average what?
The average ticket, I don't know, like the average ticket that the houses that you manage, or
the average price. Yeah.
So average price.
Prices range really dramatically across the United States. You could buy a house in some areas for $50,000 US or less, and in other areas that a house of a similar type might be as much as $800,000 to $1 million, depending on where you invest. So when you invest in real estate, in the United States, you have to kind of be like, am I in an area that is going to appreciate in price, like California or maybe Colorado, or do I think areas that have historically appreciated in price, or am I in an area that is more stable with its pricing? It's not going to fluctuate very much, but it will produce on average more cash flow per dollar invested. So I'm sure this dynamic exists in every real estate market around the world, but those are kind of the trade-offs that we have here and the discussions that we have on Bigger Pockets about where those pockets of cash flow and depreciation are and how to get the best of both worlds.
Just for curiosity, Scott, which do you believe are the best real estate platforms that you could invest in the US? Which are the most popular right now?
Real estate crowdfunding portals?
Not necessarily crowdfunding, but if I'm an accredited investor in the US or a retail investor, where should I look at to try to invest in the house market?
Sure. So there's a spectrum of possibilities for real estate investing in the U.S. If you're an accredited investor, you might consider, there's a real estate investment trust, which are publicly traded securities, which are available to accredited investors and non-accredited investors. They're publicly traded. Then you've got crowdfunding portals like a Fundrise or a company like that. They'll invest in large institutional assets like large multifamily apartment complexes or those types of things. And you can invest chunks as low as $5,000, $10,000 in deals like that. Going down the pipeline, you can also make connections with private syndicators who are looking to raise capital from smaller groups of accredited investors, often with minimums of $25,000 to $50,000. So, for example, that might be a smaller apartment complex or an off-market property with a smaller operator in a regional city like Denver or Phoenix. And then lastly, you can invest directly in the real estate itself and buy. Here's the best option. Well, you're going to get a lower probably average return from a real estate investment trust, but you're going to maybe have a little bit more transparency, clear reporting. It's regulated by the SEC. It's totally passive. And you maybe get a higher return if you're able to source good operators or find deals and manage them yourself if you know what you're doing, but you're going to put in a lot more work. And where in that spectrum you want to invest, I think, is a matter of debate and how much time and energy you're willing to put in.
Great, thanks.
Yep.
So, Andres, we got a question saying that Tepaga has any expansions plans to other Latin American countries, like in the medium, long term?
Yeah, I think that's a great question. We actually expanded to Mexico 10 months ago. We did like what we call a soft launch, just to validate our value proposition, just to get an understanding of if the unit economics were more favorable. And then we realized, which happens, I think, to a lot of companies, that I think we need more capital before we consider that we can expand. We've only raised a seed round. We're preparing our Series A. I think if we reach that milestone, I think then we're prepared for Mexico. I think in terms of LATAM, I think Mexico is the holy grail for financial inclusion, right? I think it's the biggest country in terms of population that doesn't have a financial inclusion, or doesn't have that's high level of financial inclusion. But I think, as we were saying, once again, circling with regulation, it's very different to launch in Latin America than it is in Europe, in a sense that if you have a banking license in Luxembourg, you can launch in Belgium, you can launch in Netherlands, you can capture users in Italy. In Latin America, it doesn't work that way, right? So you have to go to each country, you have to get a regulation in each country, and that can take, I think, to Luis Ruen, who's been doing, I think, the preparation for that permission, it can take months to a year. So I think we did partner with other financial institutions to launch in Mexico. I think we're going to do that approach as well. But I think until next year, I think we won't be in a position to launch again in the other countries.
I think that the biggest validation you can have in this model is that Rappi is already expanding into Rappi Bank here in Mexico. I believe they are already doing financial services through their app. So great space to be in, really interesting to be, yeah.
Yeah, thanks. So last question for you, Luis Ruben. What are like the main challenges that you have as that you had as a company through all this process to get your authorization with fintech law?
I believe that it's interesting to think that you start with and you grow with this startup DNA in your blood, and all the culture is like really oriented to build fast products, and don't ask permission to build anything. Just build it, ship it, and improve it. And since the law was passed like a couple of years ago, now you have to think everything in two ways. As a startup and as a financial institution that's going to be regulated. So infusing this regulated approach in the mind and in the culture of the company, it's tough because as a startup you want to go fast and as they say, and break things. But once you are regulated, you can break nothing, right? Rather than the whole paperwork that was around 2,000 pages and building like 14 different manuals for everything, it's like strategically thinking that maybe the product roadmap you wanted for your company now has to be adjusted regulation-wise. I believe that's the sandbox figure that exists here in Mexico. It's going to get a lot of attention in the coming months because the fintech law was too narrow. Either you are this or either you are that, but you can't be a mix of different business models. So that sandbox is going to be a good opportunity to validate a couple of business ideas. And but the whole process of turning this startup into a regulated financial institution was tough. To do it through and start and adapting the company to start working as a regulated company in the middle of the pandemic was a second level or degree of complication. Doing it remotely with the whole work via Zoom is another degree of complexity, and doing it while you try to scale 20 or 10 or 20% a month consistently, it just drives you nuts. So the whole thing of building a startup and in the process starting to get regulated and still get that innovation spark in the company, and but start thinking in the long term on how we're going to fit this regulation weights is going to be like really interesting to get along in the long term. But pretty much that's it, like turning the heads of the company into this regulated framework. Yeah.
Great, thank you, Ruben. And just to finish this webinar, if you want to conclude with any idea, with any thoughts about it, you, Scott, you, Ruben, and Andres, what are your main thoughts? And also, if you could share your contact details, if people want to contact you or want to know more about your company.
Sure. So the best way to contact me is via email. The email is scott@biggerpockets.com. So if it's easy to remember, please feel free to reach out with any follow-up questions, particularly that person who asked about how to invest in real estate from outside the U.S. I need to know the answer to that question. That's a really interesting strategic thought. So I look forward to discovering that with you. And then, as far as ideas, like I think I just learned a tremendous amount about kind of how some of the other parts of the world, operate here in North and South America here, and I think you guys have really interesting business models and a incredibly different market and dynamic with technology than we do here in the United States. So it was really interesting hearing about the fintech opportunities there, and those types of things. And I got some ideas for my business here, thanks to some great questions from the audience, and thanks to some of the great commentary you guys both had. So I really appreciate the opportunity to be here, and really enjoyed it. So thank you.
Yeah, I guess my final thoughts is I think there's never been a better time to be an entrepreneur or to launch a startup. I think you're never going to have more people at home sort of needing to devour the digital products you put. I think there's never going to be, unfortunately, more unemployed people who right now they can't find a job because the jobs market isn't moving. So they'd gladly join your idea or your startup and just pitch you in. And I think, yeah, I think a lot of the biggest companies have launched in crisis, right? We're talking about Airbnb 2009, 2008, Disney, obviously, right after the Great Depression. I think right now it's actually, I think, a great time to start your business and to try to build a digital solution for any type of industry. So that's my encouragement. I've also put my contact info in the chat over here, and yeah, it was great sharing this space with all you guys.
On a part, I think that it should be like really interesting to catch up in another 6 months to see how things are progressing and how this pandemic has catalyzed all these kinds of initiatives and new products. As Scott and just told, I believe that this is not just a particular situation that will fade away quickly, rather than it was just like the match that ignited the whole thing that is gonna stay that is going to become like the new standard. And hopefully all the startups that are building digital products and new ways to get services and products through the internet really understand like the size of the opportunity we are facing. It's like our competitors were blocked away for a couple of months, and we have the opportunity to dominate the market with all the businesses closed. And it's like just like the perfect storm for us. We're working like crazy, and on the other side, you have to manage all this economic disruption we are seeing about the COVID. So in our space that is giving loans to people, it's really fascinating to try to address this uptick in demand, but balance it with the risk of the market itself. So it's a great time to be in this industry, and the level of an amount of things we have learned in the last couple of months is just like the adoption of the internet. It's just at an amazing pace, and 6 months ago we wouldn't believe that we will be facing the challenges and insights we're looking at right now. So super thankful for the opportunity to be here, Roberto, as always, and it was great to talk to you, Andres and Scott. Looking forward to keep the conversation open, and let's catch up in a couple of months.
Great. Yeah. So thank you again. Thank you very much, Scott. Thank you very much, Luis Ruben, and thank you very much, Andres. I think there's a lot of challenges and a lot of opportunities going on each of your companies. Also, I think it's very nice to hear different perspectives from different people from different parts of the world, because I mean, you could see like the difference, but also you can see like the similarities, especially like maybe in Latin American countries, and also for someone as Scott, that also Latin American clients could be also like a good opportunity. So yeah, I think we should do this again in a couple of months. Also, I hope to continue in contact with you, because we do like different seminars, different webinars. We also do some like fintech courses, or and also there's a lot of like, because like with this fintech law, Scott, some of the companies are doing like a lot of crowdfunding, like fintech, like crowdfunding for real estate. So I think it's a topic you should continue. Like you should like maybe pay attention on that in Mexico and other countries. So yeah, let's keep up. Let's keep in contact, and thank you very much for your time. Also, thank you very much to Denver, to Tim Martinez, to Renata from ProColombia, and Antonio from Zapopan to make this happen. And I hope this is like the first event that we do in collaboration. And thank you very much. Thank also for everyone that joined this webinar, and also all the people on Facebook that watched us. Thank you very much, and I wish you the best for your companies, and we keep in touch.
Thank you, everyone. Stay safe. Bye-bye.
Bye.
Thank you, everyone.